very much, Matt. My name's Chris Reed. I'm the CEO of Neometals. Neometals is a Australian Stock Exchange listed project developer. We innovatively develop opportunities in minerals and advanced materials essential for a sustainable future.
Well, there you go. That's a nice, short and sweet and to the point. How are you, Chris? How are you, Jeremy?
Very well.
Very well, Matt.
Good. Well, look, we thought we'd do an end of year roundup. You've had a heck of a year. Share price up over four times. So I think shareholders are happy. But I want to see if there's more to come. Can we start off, first of all, though, with the announcement this week of the deal with Bondalti, which is to commercialize the lithium process in Portugal, Europe. What are you doing there?
Yeah, sure. Look, we developed a process called ELI a number of years ago when we were a partner with MinRes at Mount Marion. So when we made the decision to develop Mount Marion with Ganfeng, we moved this technology that we'd been developing, and essentially what it does is enables the production of lithium hydroxide from either a brine directly, which is a lithium chloride solution, or from a lithium chloride solution generated from leaching spodumene. So this process, we originally started it as a tool to get lower operating costs and to produce more hydroxide. And so, we now find ourselves at the point in the lithium cycle that at some stage this decade, we're going to reach peak spodumene, right? And there's a real challenge. Where do we get the next 1 million tonnes of LCE or 2 million tonnes of LCE to make sure that we've got enough lithium for the batteries, because it is the only non-substitutable element in the battery. And so 70% of the world's lithium resources lie in lithium chloride brine deposits. And so this process enables, I guess, the developers to do what they do best, which is to pump the water into ponds and to let the sun do its work, remove the sodium and the potassium via crystallization, which it does when it evaporates the water. You're then left with a concentrated lithium. So rather than using the more expensive carbon-intensive process where you use soda ash and caustic, what we do is we can actually purify using solvent extraction and ion exchange, not too dissimilar to what we use at the battery recycling, and electrolysis, so that we can use renewable power to do a lot of the work. And so for a fraction of the operating costs and a fraction of the capital costs, we were able to enter into an agreement with Bondalti, who have experience in electrolysis, to look at developing a lithium hydroxide facility on the Iberian Peninsula. There's about 3 million cars made on the Iberian Peninsula, the majority of those in Spain, to a lesser extent Portugal. So to underwrite the future of that, the powers that be want domestic production of lithium hydroxide to go into EVs in the future.
Okay, so Chris, you guys talk about the commercialization of this. So I'm trying to wonder where you're focused in on. Is the technology done and dusted and that's nice and easy because you've cracked it already? Or is it about how do you get something in Europe which is able to process in Europe and supply into the European market? I mean, what do you mean by commercialization?
So it's in two parts. So, we've got a technology just like the battery recycling technology. And so what we've got is a very strong technical partner to go through that final stage of evaluation, which is piloting the brines. So originally we developed this process on lithium chloride solutions from Chile. We have tested Argentinian brines from various deposits. But we originally started it with lithium chlorides that we made from Mount Marion spodumene, right? And so we've tested these on a continuous semi-pilot scale that we did up in Buffalo, New York, which is a sort of home of chlor-alkali. And now we're doing that in a dedicated pilot facility that will be located at Bondalti's Esteria chlor-alkali facility, because, one, you've got access to, infrastructure, trained staff, it's permitted, and all the waste products just plumb into the existing infrastructure. So it's the perfect spot. It's a bit like when we went with SMS, we built a demo plant in the middle of their construction, their center of manufacturing. Well, here we're putting a pilot plant at the center of operations. And it's an identical process. So electrolyzing a lithium chloride solution is, and lithium is an alkali material, same as sodium and potassium. So chloralkali is 100-year-old plus technology. We use traditional chloralkali cells. We have to use a little bit more power, but we produce a product that's probably 10 times the value of the traditional chloralkali producers. So they produce caustic soda. We produce lithium soda or lithium hydroxide. That's what its modern name is.
But you're going to need to feed this machine that you've built here. Sure. So, like location, I get why it's going to be appealing within the EU, battery metal arena. But lithium is a very technical problem to solve, right? In the sense that it's not like digging up gold and there's gold. This is each feed is different. The construct is different. So where are you going to get it from? What kind of deal are you going to have to put in place to make sure that you can consistently get enough feed to feed this process that you're putting in place?
Yeah, sure. So, selling a 6% salar concentrated brine's been done before. SQM and Ganfeng had a business centered around that from 2010 to 2015. Before the price, we went on another pricing cycle. So I think what Eli does, and we've got flexible business models, so we can look to developers principal in a joint venture. We could license it out. We've got a whole myriad of the ways that we can commercialize this technology. So, what we've chosen here is, one of the beauties of Eli is that you can unlock lithium brine deposits that are in the ground, right? So it's if you have a look at the history of lithium production from brine, all of those operations have taken, a very long time to get built and to operate. It's easy to pump water into ponds and to take out the sodium and the potassium. And then you have to take out, they use lime and carbonate to obviously then downstream process. So the easy part is to make the salar concentrated brine. The hard part is turning that into the chemicals. And you can go back and you can have a look at La Negra 2, you can have a look at Orocobre. They haven't been smooth sailing and have taken longer than probably envisaged. And it's not just limited to brine. Some of the hard rock deposits have too. And certainly the hard rock converter plants that are in Australia have taken longer to commission. So, you would, and think of the salar concentrated brine as like a liquid spodumene. One's 6% Li2O in a rock, the other one's 6% Li in a liquid solution. So the Chinese take spodumene exclusively pretty much in China and convert that into the lithium chemicals. What we're doing is actually putting those same converters, refineries, we can put those in different spots. I mean, ultimately, the best spot to put it is up at the salar, right? And powered from renewable energy. And, there's these modern DLEs, so direct lithium extraction proponents. There's 60-odd different DLE variants, right? Or companies that are promoting these direct lithium extraction processes. Well, what do they recover? They recover lithium chloride. So rather than bringing mountains of soda ash and then mountains of caustic to make carbonate and then hydroxide and having all these byproducts and trucks whizzing down from, the salars down to the coast and stuff, you would be able, your biggest reagent is electricity. And so how we've developed our flow sheet is that we make excess lithium hydroxide and we can sparge CO2 through it to make carbonate. And we actually use the carbonate, the lithium carbonate and the lithium hydroxide to take out some of the impurities. So rather than introducing sodium into the process to remove impurities, we add lithium and just keep a recirculating load of 10 to 15%. So it is, you can have a look at the operating and capital costs that we've published. They whether it's hard rock or brine, they are a game changer. And what we think is, rather than trying, helping people, and there's lots of lithium brine deposits, so you worry about, making a concentrate, and we can buy it off you for, a percentage. And if you have a look at the percentages, they range, if you have a look at the trade data from, if it's FOB, CFR, it sort of oscillates around the 50%. So the aqueous lithium chloride solution would pay about 50% of what the contained LCE would be. So that leaves plenty. You could buy lithium chloride off these guys, and all they've got to do then is to build ponds. They don't have to build chemical plants in exotic places and import soda ash from the US and caustic, and it all gets very difficult. Whereas ours, you're doing everything up at the Salar, and you're using potentially renewable power to give you the lowest carbon footprint.
But is that the most efficient way here? Because I'm trying to work out how, when you use the word commercialization, there's a lot in that. It's a very loaded word, isn't it? Where you've got a pilot plant in Europe and saying, we've got a technology which works. We've tried it on a number of solutions. And we think we're good at this. You've got lots of brine producers who struggle, who are cash constrained in terms of the ability to capture value, or quite frankly, money further downstream. So you walking up and saying, we can potentially help you here technically and possibly financially. So what's the preferred model? Why does having a pilot plant in Europe mean that it's a good thing to go into South America and maybe build some of these smaller, similar size plants to help these guys out? Is that the most efficient way?
You've got a pathway to commercialization, right? Because it's a full industrial chloralkali, right? And so you could displace the sodium chloride with lithium chloride and make much, much more money. And they like to have the lithium hydroxide close to where it's being used. The cathode makers like nice, fresh lithium hydroxide, because in time it'll turn into carbonate. And so, I guess the value proposition, it'd be like saying, I've got a spodumene operation and it's in the middle of, say, Russia, right? And okay, well, maybe I can't, for infrastructure or whatever, I can't get it to a converter. So I'm going to have to I'm compelled to build my own downstreaming plant. So I can't start up as a spodumene operation and then use the cash to build my refinery down the road, or down, in the future, which is pretty much de rigueur for all the new developers. Everyone is going to move to integrated operation. But if you can get them up and running and make money, as a concentrate operation, then these brine resources are very, very large. So you might we might buy it off them for a few years. We might toll convert it. We might do joint ventures. We might go and buy our own brine, right? We have that flexibility. It's really not that dissimilar from the battery recycling, insofar as we've got flexible business models, we've got a low-cost process. It's very, very attractive economics, but we have to do deals to feed the battery plant. You have to do deals to feed the lithium refinery. Every refiner in China, if they're not integrated, has to go into the spot market and buy spodumene. That's the next, and a lot of those guys would all be very similar in operating costs. Whereas ours is, a very much order of magnitude less than the current technology. Fantastic product if you go back and have a look at the announcements that we've made historically about it. Leading carbon footprint, it's basically impossible to get a lower carbon footprint than what we've been looking at. If you have, DLE powered by renewable energy, and you have the purification electrolysis powered by renewable energy, and your main reagent is a bit of lithium carbonate, lithium hydroxide, a bit of solvent extraction and ion exchange, it's a very, very competitive and compelling argument.
Okay, but what are the restrictions for you? Because if I look at your lithium-ion battery recycling project, if I look at the vanadium recovery project, if I look at Barrambie titanium and vanadium project, they have obvious scale to me. This thing, is it going to be constrained by the need to raise capital for the capex component? You're going to have multiple projects requiring multiple sites and multiple plants of whatever scale. Is that like a constraint here, or have you got a way around that?
No, well, look, in terms of what the capital investment is for these, the economics aren't that dissimilar on an integrated basis for the battery recycling, right? In terms of the potential market, what the demand is going forward. Lithium production by 2030 has to grow at about 30% compound per annum, right? All of the spodumene guys are going to be tapped out 25, 26, something like that. We will be at somewhere around peak spodumene, right? And people go, oh, that's great. The world will be in balance to lend. Well, actually, no. The spodumene goes to China. China will decide how balanced the world is. So if it doesn't come from Australian hard rocks or African hard rocks or North American hard rocks, South American hard rocks either, or Chinese hard rocks, where does it come from? 70% of the resources are in brines, right? So, the Bolivians that have, Uyuni, and that's a massive deposit, landlocked, they would be a fantastic beneficiary, solar power, batteries, electrolysis, purification. Then they just have to do what they need to do, which is to make ponds evaporate it. Then they could pass it over and we could purify it and electrolyze it, right? So, there's deposits in every continent that could use it, whether hard rock or brine.
But how do you get into the point is with the capex requirement, is it de minimis in the context of contracts that you could have in place, or how and who finances that, and what sort of quantum would we be talking about? So each time you do this, you can have a sense of what it's going to take to.
Yeah. So look, the last numbers that we had out, for a spodumene converter, sort of 5 years ago, it was about 138 million US. So, you could use some inflation figures there. Obviously, with the brine operation, you don't have to put the spodumene converting kilns. So that saves you a bit of a whack. But it's a 70-30 owned, 70% near metals, 30% owned mineral resources. It depends on what you do. Some big producers might want to license it. Some guys, might want to do joint venture, and some might want to do all three. So initially, they want to get their ponds up, get some cash flow, get downstream, maybe use our process, maybe use the normal process. But it's enabling those operations to start up as a concentrate, where before that actually wasn't a market. We need to get more lithium into the market. And the spodumene guys are doing a fantastic job. We're building converters here. We're building new mines. There's debt and equity for mines. A lot of the Australians and the African guys, they're flying along. But why is there no real big licks coming out of the brines, right? Because despite having, what they say is a massive operating cost advantage, none of these guys are investing in anywhere near the capacity that the Chinese and Australians and Africans are investing to respond to the market, right? Some of these guys say, we might put on 100,000 tonnes capacity. We're in the market where we're needing millions of tonnes to be added. So.
But is this sort of market spend? When we talked about wedging your spin out previously, and I think the nickel price then was between 16 and 18,000. You said 25,000. This thing works. So that's just a supply demand delta thing, and it's coming. And I think we're up over 20,000 at the moment. It's it's all good as long as the market reaction helps you. Would this work at today's lithium prices, which have seen a tremendous growth this last year? Or again, does it need a price some point in the future for this scenario to work?
No, it'll actually work better. You'll have more people coming to you at lower prices, right? Because it's a capital and operating cost saving that is the center of the technology, right? Yeah, you're eliminating massive imported reagents and moving those around, massive movement of liquids, carbon that's generated in those big supply chains. So at the current market, when the markets are really, really buoyant like this, you just need to get them into production. It really arguably doesn't matter whether you use our process or the incumbent one. But what I'm saying, with the incumbent brine process, there haven't been that. I mean, LAC's developing now, Lithium Americas. But then, there's no real major other ones outside of obviously the existing guys trying to do the brownfields expansions. But I don't think anyone's really covered themselves in glory there in the past, 5 or 6 years. They certainly haven't contributed anything near as meaningful as the spodumene guys. And the spodumene guys and the Chinese, the Australian spodumene and the Chinese converters have done and have the capacity to, keep the market in balance into 2025, 2026. It's really, it's as much as a technical solve to unlock these deposits as it is a cost argument.
So, Chris, if I look at, you've always had cash, right? Since you did the Mount Marion deal, you've always had cash, and you just had big dividends to shareholders, all good stuff. Is this going to take up a lot of money? You've talked about shared costs of $4 million. It doesn't sound like a lot, but that might be just phase one. What's the total investment in this project required from you as your portion of it?
If it was to go through to production,
yeah.
So you would have probably around 70 odd million, 70 to 80 million US would be your funding requirement.
But so what would have happened at that point where you've got an FID to make in terms of 70 million? It's more than the cash position that you've got at the moment. So what would you need to have in place to be able to say, right, now's the time to go forward with this? And what type of funding would we be talking about here? Is this going to be debt because of the sort of advanced nature of it, or what?
Yeah. So look, it'll be in a special purpose vehicle. At this stage, if it consummates and you form the joint venture, it will be Bond Alti and then RAM, Reed Advanced Materials, which is 70% near metals and 30% MinRes. So the SPV will need to avail itself of financings. Now, all the lithium developers that I know of in Europe are highly confident of procuring the 30% capital funding or capital cost rebate from the EU, which is designed to stimulate exactly what we're planning, which is domestic production of lithium chemicals in the EU to underwrite the future of the car industry and the transition to more EVs.
So what's that conversation look like for you at the moment? Because obviously you a lot of your operations now are in Europe. Is that a much easier conversation now? Because, hey, we're going to bring you the battery recycling. Hey, we've got vanadium recovery project here. Oh, by the way, we're now doing a lithium project in Europe. So it's the same conversation with the same people.
We'll have more and more people in Europe. So, our last of our team got out of hotel quarantine Sunday night. Was in the office yesterday. And, was in the office today, Tuesday. And, we will have more people there on a constant basis rotating through. Obviously we are advancing our plan to list on the London Stock Exchange AIM market in the March quarter of next year. We will be much more relevant and to, gain access to the weight of green money that is available in Europe by having European projects. And Jeremy and I will, no doubt, when we can after February 5, we'll be travelling and getting in front of our potential future investors and financiers and showing them our wares. And, you know, this project, if you have a look, you know, at the sort of catalysts, we're looking mid-year for the battery recycling commercial, 50 tonne a day decision. We've got a 10-tonne operation that we think it will be in a position to start operations in the March quarter. The vanadium recovery project is a decision for the end of 2022. And the lithium, you know, the agreement with Bondelti, you know, gets to a head in mid-2023. So they are the pipeline of the European projects. And obviously we've got an upstream hard rock titanium vanadium deposit that we're just running with a dedicated, I mean, all of the projects have got dedicated team and management, and they're all in joint ventures. So we're not actually looking to build up massive operational teams in Australia to run. The majority of the operations are designed to be run as joint venture companies in the jurisdictions of our partners. So, yeah. I mean,
all good. All good.
Fantastic pipeline of opportunities.
Yeah, absolutely. Well, let's talk to, because I do want to look to 2022. But I think, Jeremy, you mentioned that you wanted to kind of pull up a slide just to help me understand what you guys have done this year. I don't know if now would be the time to share that. And I just want to talk through some of the things that you've had to do to kind of set you up to succeed in 2022, 2023. Here we go. What's this? Right. What's happened since the last AGM?
So this is probably not a bad way to share that information. So this is a slide we used at our AGM. So notwithstanding, you know, the AGM was through to 30 June 2021. It probably encapsulates all the way through to Christmas where we are now. And I think the message was, you know, essentially the company had a really, really good year. You know, shareholder returns were through the roof over a year and 5 years. We demonstrated that, you know, we had the appetite when some of the projects we're working on get mature enough to spin them out on their own. And that was what we did with Widgie Nickel, which was a new spin-out company, and all the shares in that went to our existing shareholders. And that was financially pretty rewarding for all the shareholders. We left the year with a bunch of cash and investments. We had a good year in terms of progress, in terms of ESG, put out our second sustainability report, set a bunch of deliverables and targets, and aligned ourselves with TCFD and a range of other things. So that's becoming a lot more mature. Grew the team. You know, diversity goes up as part of that. There was a bit of succession in there as well, with one of our non-executive directors stepping down. And as Chris said, you know, we've got 3 core projects all poised next year for investment decisions, and a pretty exciting R&D development on Eli, which we were just talking about. And then, in terms of what happens beginning of next year, we'll start commercial operations, so earning revenue from our disposal recycling facility in Germany. And that's tracking really well in terms of the modifications we needed to make to the plant that already exists. So it's using the existing demonstration plant and putting that to work. And look, early next year as well, the London Stock Exchange listing remains on foot and on track. And, you know, everyone's very busy with admission documents, etc. That'll get tidied up the beginning of next year.
Okay. And you're moving to London, are you?
I think Western Australia is a pretty nice place to be, but certainly we'll be spending a lot of time speaking to people in London. And come February, West Australians are allowed to travel a bit more freely. So for sure, you're going to see Neometals over in London.
It's a serious point, actually, because I think if more of your meetings are going to be in Europe, I mean, what size of team, what's the weight? You talk about staff count is up, and, you know, great that there's 31% female workforce, but you're going to have to also think about geography as to where people are based, because I guess COVID has said we can work remotely, but it's going to be better face to face, isn't it?
Yeah, sure. We'll have implants into each of the SPV teams for sure.
Okay. Well, look, I mean, congratulations on the year. I mean, spectacular. I don't think anyone could argue with the moving away from mining and into project generation. It's working. Are there going to be more things that we should be looking out for, apart from the deliverables for 2023 in terms of new initiatives?
I'll have a crack at that. In terms of new initiatives, we're pretty busy in terms of the pipeline of stuff we've got. So I don't think we intend to reinvent the wheel, but certainly, lots of outcomes and, very busy development pathway on those 3 core projects and on Eli as well. But, we've got the means to manage all of those. We're not stretched on bandwidth so far because, as Chris mentioned, they're joint ventures, they're set up with other people. It's worth pausing for a second. Even on Eli, it's worth considering that, that is a binding collaboration with a huge chemical company to scale up the technology at a pilot level. And from that, comes all the data from which you do your studies, and then you have a better handle on your costs and your returns and your business models to some of the questions that you're asking. So it's all very much a stepwise process.
Brilliant. Okay. Well, guys, I'm going to say thank you very much for this year and thank you very much for today. We look forward to 2022 and seeing what you get up to and obviously delivering what you say you're going to deliver. So we'll see you next year.
Thank you very much, Matt. Merry Christmas to everyone and keep safe. Best wishes for 22.
Cheers.